Hello and welcome to myfinanceteacher.org. In this video, we're going to have a look at fundamental valuation of Agnico Eagle. But before that, let me point out that you might be interested in our analysis of a range of assets, including the general stock market, cryptocurrency, energy, and other commodities at myfinanceteacher.org. Among the recent discussions we've had is this possibility of a head and shoulders formation. We've started discussing this a couple of weeks ago, actually. Hence, we've been out of the stock market and avoided this significant decline. We've also previously mentioned this support zone based on October and November highs, as well as December lows, and Nasdaq did hit that support zone at the Friday low last week. And for further outlook from now on, you might consider joining us at myfinanceteacher.org. Coming back to the valuation of Agnico Eagle, remember, this is a longer-term valuation, which is likely to be the general tendency for the share price, possibly over the next couple of years, whereas day-to-day, week-to-week volatility can actually move the ongoing share price quite far away from this valuation. As usual in the valuation, of course, we're going to consider the resource prices, the amount of reserves and the resources that the company has, the costs of producing those reserves. We do look at the company's long-term debts, taxation, we look at the valuation per share, and we do look at the time value of money as well as insider shares. All of the data I'm going to discuss here, you can confirm all of that in the Q4 2020 reports, the news release from the 11th of February, and from Yahoo Finance. For the gold price, I'm going to assume three scenarios. A balanced scenario of 1800 for the gold price, say that might be our average over the next couple of years, 2 to 3 years. Conservative scenario of 1600 for gold price as an average price over the next 2 to 3 years, and the optimistic scenario of, let's say, $2,000 per ounce as an average price. Although, to be honest, over the next 2 to 3 years, at the highs, I do expect gold price to go significantly further than $2,000. By the way, today is 8th of March, and if you are watching this with a couple of weeks delay on the public YouTube channel, again, you might join us at myfinanceteacher.org for immediate updates. Looking at Agnico's reserves and resources, for proven and probable reserves of gold, company has 24.1 million ounces. And for measured and indicated resources of gold, the company has 15.3 million ounces. AEM also has silver, 29.8 million ounces of proven and probable reserves of silver, and 32.6 million ounces of measured and indicated resources of silver. Beyond that, the company actually also has base metals, but we'll come to that a little later. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. The all-in sustaining costs per ounce of gold equivalent ounces, that's including the byproduct of silver, is going to be around $1,000. That's from the 2021 guidelines. Actually, this $1,000 might turn out to be on the high side, as the guideline is from $950 to around $1,000. Meaning that this valuation for AEM that we're talking about might actually be leaning towards the conservative side. The company has nearly 1.7 billion in debts, so that's a pretty large debt. And here I assume a tax rate of 20%. In reality, the guidelines for 2021 expect a tax rate of around 34%, but as my valuations, in my opinion, lean towards the conservative side, in all of these valuations, for now at least, I'm going to stick to the assumed tax rate of 20%. Hence, we're going to look at the value of the reserves and the resources the company has in the ground after the cost of production, after debt, and after taxes. Of course, we are going to look at the value per share, and the company has 243.3 million shares outstanding, out of which only 0.11% are in the insider hands. Usually, it would be nice to have larger percentage here, as insiders, firstly, might turn out to be strong hands, supporting the share price, and secondly, large insider holding would inspire confidence based on the alignment of management and company incentives. Looking at the time value of money, I'm going to use a discount rate of 5%, and based on the ongoing expectations for production for 2021, we will have proven and probable reserves of gold of 12 years, And if we add only half of measured and indicated resources to that, we will have reserves and resources lasting for around 16 years based on the ongoing production. So with all of the above in mind, coming to our conservative valuation, where a reminder, we only plug in a gold price of $1,600 per ounce, and we only assume as if the company has proven and probable reserves in the ground only, without any measured and indicated resources, never mind any inferred resources. This assumption gives you a conservative valuation of just under $32, which is actually 44% below the ongoing market price of just above $57. So again, if gold really just drops out of bed over here and things don't look nice for precious metals over the longer term, there is probably a 44% risk level on AEM at the moment. Next, moving on to the balanced valuation, let's assume an average gold price of $1,800 per ounce, but still, even in the balanced valuation, we only are looking at proven and probable reserves in the ground. That gives you a valuation of under $44, which is still showing a risk level of around 24%. That's if gold price generally stagnates here and moves somewhat sideways over the next couple of years. And for the optimistic valuation, let's plug in the gold price of $2,000 and look at the company valuation, including proven and probable reserves, as well as only half of measured and indicated resources, never mind any inferred resources. So even in our optimistic valuation, we are relatively conservative, trying to avoid any capital losses. These assumptions give you an optimistic valuation of just over $69, which is now showing a nice potential of at least 21% to the upside. That's if gold price does relatively well over the next couple of years. And again, this fundamental valuation is basically the value of the reserves and the resources in the ground after production costs, after debts, and after taxes. But looking at the charts, perhaps there is more to see here. Let's compare the performance of AEM versus gold. And since the lows in March 2020, gold has gained around 16% into March this year. At the same time, AEM outperformed gold by around 4.7x, by around a factor of 4.7. Let's bring this factor down to, say, 4. Hence, if gold comes back to, say, $2,000 per ounce on average over the next couple of years, which is around a 25% gain, let's say, multiply that by 4, that's a 100% gain for AEM. Is that likely? Are we going to see AEM at over $100? Well, perhaps that is somewhat optimistic, but a retest of recent highs above $80 as gold rallies into the new intermediate cycle, perhaps over the next few months, is, I think, a very likely scenario. Let me know if you agree or disagree in the comments below. And for now, lastly, let's have a look at the interesting highlights that didn't actually go into the valuation model. Firstly, besides precious metals, Agnico is actually also producing copper and zinc, which might help to support the share price if base metals perform well as they have been lately. And secondly, this valuation looks at only ongoing resources and reserves that the company has, without looking at any exploration potential. And Agnico does actually have quite a good exploration potential. So take that into your consideration as well. For now, that's all from me. Happy International Women's Day. And if you want more immediate access to my analysis of a range of assets, join us at myfinancesteacher.org. Have a nice day and good luck in your trades.